All right, good morning, everyone. Happy Monday, the 4th of August. Hope you all had a good weekend full of sunshine, relaxation, dog walks, all the fun weekend things. But all right, guys, we'll dive in here. There was a few pretty meaningful changes in all the pretty colors last week. For one here on your QQQ daily chart, you had the big flush, the chop, the push, and then they finally got their daily buy signal back in early May. Which they kept pretty much all the way up until last Wednesday. The chart flips bullish, and they push it, they pull back, they hold it. They push, they pull back, they hold it. You got a beautiful daily squeeze, right? Big push, big breakout. In most cases, they have that daily buy signal. Everything can be a little bit easier. You buy your pullbacks, you buy your squeezes, and then, for your Wednesday candle, we go from bullish to neutral. All right, so now we're at a point where if you look at your QQQ weekly, from your weekly chart down to your 5-minute, it's the only time frame still printing that buy trigger. And hey, you gotta like it, right? You have good structure, momentum, beautiful uptrend. But that'll be a really bullish chart down to about 5:30. So things could pull back another 5 to 6%. And your weekly chart says I'm bullish. And then same scoop here for the S&Ps. All right, they get their daily buy signal back in mid-May. Makes the bulls' job pretty easy. They pop it, they pull back. The buyers come in, they push it, they pull back, big squeeze, big push. And that chart flips neutral back on Thursday. So now we're at a point where, again, you look at a bigger time frame like a monthly chart or a weekly chart. There's no issues at all, but there could be room here in the short term for a bit more of a pullback. And then you look at your daily time frame, your 30-minute, your 15-minute, your 5-minute, and we are fresh out of buy signals. So that was one change last week, and then the earlier change here, which happened back on Tuesday. The ranking system went from bullish to neutral, which to me means basically you take your foot off the gas. Everything that works when you have a bullish ranking, you wake up, you buy your 15-minute squeezes, buying 30-minute squeezes, daily squeezes, weekly squeezes, buying pullbacks, buying breakouts. The things that work when the conditions are bullish, they don't work all that well when things are neutral. And neutral is not bearish. It's a little bit more, you've got a great-looking monthly chart. You have good-looking weekly charts. Your daily chart's kind of tired, and maybe your 30-minute and 15-minute are a little bit Neutral to me means, again, foot off the gas, and not too much edge here for a big swing trade, long or short. Right, the Qs dropped from, we had them for a few weeks, 80% of max strength, 90, 100%. That bad boy drops down to 23%. Again, very neutral. S&Ps drop down to 22, Dow Jones a little -9 or a +9, and the IWM a -11. So in terms of swing trading, I don't like any of that. Not bullish enough for, hey, I'm going to jump in, I'm going to buy the September monthly calls, and I'm going to build up some huge trade. But at the same time, I don't see a big short here. So maybe until this changes, things get a bit more bullish, things get a bit more bearish. We shift that focus from weekly, daily, 4-hour squeezes to 1-hour, 30-minute, 15-minute squeezes. Jump in, get the hit and run, catch a quick base hit, versus, hey, can I buy something and catch a rally for 2, 3, 4 weeks? Again, that doesn't work too well in neutral. All right, then if we look down here at the sectors, healthcare would be no bueno. So healthcare is your bad boy, XLP, energy, transports. They're all a little bit rough around the edges. And your strongest sector right now would be the utilities. So think names like DUK, think names like SO, those kinds of characters. And then gold's getting a little bit better. The Big 10 basket, big drop off in the XLK, big drop off in the SMH. And again, think back last 2, 3, 4 weeks. You buy AMD, you're making money. You buy NVIDIA, you're making money. You buy Broadcom, Qualcomm. We had a 2, 3, 4 week period. The SMH was at like 90-95% of its best score. Again, it's not bearish, but now you're down here at 23. Gave you a good push, pulled back a bit, and now says, all right, let me catch my breath. I don't know if I'm gearing up for a huge pullback. I don't know if I'm gearing up for a big pushback to another all-time high. But I gave you a few good weeks. Let me pull back, let me catch my breath, wait for a better setup. All right, versus the immediate, I got to buy a call or I got to buy a put. So yeah, with the exception of the utilities, which I think are only so sexy, everything's just pretty neutral here. Off the Big Ten basket, say the pullback ends tomorrow. I don't think I'll be in a big rush to buy Apple, -50. Wouldn't be in a big rush to buy Tesla, some Netflix. But I may be looking at Meta, Microsoft, Nvidia, Broadcom, and maybe some Google. They hold up a little bit better. And then your 10 strongest names here would be utilities, the Big Duke, SO, DoorDash, Walmart, ABBV, Meta, Microsoft, APP, and the Roblox. But here's my game plan, keeping things nice and simple. I'm going to take the cash S&Ps, cash QQQ, and I'm going to drop a big line at my 21 EMA, the daily 21 EMA. And, now it's a good old-fashioned over-under game. They gap it up, they pop it, and they rip it back through that 21. They keep it above it. You get a couple of closes back above it. All right, yeah, at that point, I think it's game on. You're looking for a buy. Back above the mean, they give you a fresh 15-minute buy signal, fresh 30-minute buy signal. I would be a buyer. Would be a buyer. If they can't do that, they can't get back above that 21 EMA. They can't give you a 15-minute, 30-minute buy signal. Then I think room here in the short term for a flush down towards at least your daily 50. 545-ish QQQ, and then for the S&Ps, right, if they can't take back their daily 21, maybe room for a flush down towards, let's call it 6,100 and change. So again, mark up your daily 21. And then for those of you who have the big three indicator, you're taking your directional cue from your 1 hour, 30-minute, 15-minute, 5-minute. Right, they gap it up, they pump it, and say tomorrow, S&Ps are back into 6,300 with a 15-minute buy trigger. I don't think I got to go buy every call, but I'll look for a long. If they fail to pop here, they dip again, and we have a 30-minute, 15-minute sell signal. Again, they might be a short-term short. So keep it easy. 21 EMA, the big over-under. Back above it with buy triggers, you buy it. Below it with a sell trigger, you think about a short. But a few more things I want to cover here as far as, let's just say for conversation's sake, right? Conversation amongst close friends. We do pull back a bit more. Four charts I want to show you would be SMH, XLK, Google, and AMD. And they would all be on the monthly time frame. And unless things really change in a big fashion, big fashion meaning we go into a bear market from here. Depending how low is low, I think these could be maybe 4 of your better buying opportunities for the remainder of the year. So, numero uno would be the SMH. All right, and you got this big, beautiful monthly squeeze setting up. And here's the thing about these monthly squeezes. Just the initial pop off that 21 EMA, that is let's see. Just your initial pop off the buy zone, that is a 35-40% pop. And they haven't broken it out, and they haven't even fired the squeeze yet. So yeah, until things change here, they keep the squeeze, they keep the structure, the trend, momentum. They keep on cranking out the white arrow. I think, potentially looking for a path here into 325 to 350. It's on a 1 hour squeeze. It shouldn't happen over. Would be pretty cool, of course, but shouldn't happen over the course of a few days or a few weeks. But again, things pull back a bit more. We find support, we rebuild. In terms of buy the dip opportunities, for me, that would be number one. Number two here would be, let's go jump to XLK, the old tech ETF. Same scoop. Initial pop gives you a 25% move. They're working on the breakout, and they haven't fired the squeeze long yet. Any kind of pullback, any kind of chop into a brand new weekly squeeze, brand new daily squeeze. I think a great spot. You build up your position for a path off the monthly. So you got the XLK, and then same rules apply here for the Google. In terms of the entry, Google's a nice one. All the structure, the trend, momentum, the buy trigger, and you pretty much got it at the sweet spot. Not too far from that 21. If they do break it out, if the squeeze does fire, and until the signals change, they say there's a pretty good chance it should. I think eventually we're looking up in Google as a 225, 230 plus dollar stock. So let them pull things back in the short term. Let them find support. Maybe Google gives you a brand new daily squeeze. All right, now you're jumping in buying that fresh daily squeeze in the context of a big monthly squeeze. A little bit more juice behind it. And then fourth one here would be AMD. Advanced Micro Devices. And what I like about this one is I haven't even gotten that momentum shift yet. We'll see what's up here after earnings, but I think we're maybe finding it pretty early. So again, let it pull back, let it find support. You may be jumping in for your next 1 hour squeeze, 4 hour squeeze, daily squeeze. But the bigger picture is you got that bad boy in the background. If it does fire long eventually, maybe a path here from $1.70 towards 250. What I also like about it, it should go hand in hand there with the SMH. The SMH breaks out, the SMH monthly squeeze fires. Good thing for NVIDIA, good thing for Broadcom, AMD, all involved. So 4-pack of monthly squeezes for you. But yeah, guys, aside from that, as far as short term, I've got no agenda. I am not overly bullish. I'm not bearish. I'm not in a big rush. We are in cash here in the room, and yeah, playing the game of patience and playing the over/under game. Later in the week, QQQ back into 560, 565-ish. They've gotten the 15-minute, 30-minute hourly charts bullish. I'm trying to find a spot to buy it. They don't do all that. Yeah, maybe a little slippage down to 545-ish. But as far as I can see, more of a normal, healthy ebb and flow kind of pullback. After one heck of a push. So if you look at names like NVIDIA on a daily, could change, could get ugly. But up to this point, your little 7% push off the highs or a pullback off the highs doesn't change really anything here about NVIDIA. Beautiful trend, perfect structure, momentum. What I would love to see here is a brand new daily squeeze. Push it, pull it back, take a breather. They chop it out for a few days, brand new daily squeeze. And we load the boat. Maybe the same thing here for a Broadcom. Pull it back for a bit, let it chop, print out that squeeze. Your last daily squeeze gave you a little casual 11% pop. If we look at a daily chart of Meta, could pull back to about 730. Remains a pretty good looking chart. What about maybe Google? Right, Google will love a brand new daily squeeze. What about the Big Apple? The Big Apple, a little bit more like the Big Crapple. So that one, I'm not in a big rush to buy. Tesla, I'm also not in a big rush to buy. With a brand new daily sell signal. But yeah, for me, it'll be an over/under game and more of a what does the spreadsheet say kind of thing. And I love the fact we got the shift back on Tuesday. Goes from bullish to bullish neutral all the way back down to just neutral. But all right, y'all, any questions for me? Any chart questions, anything you want to look at, get it in the chat. I'll see what you got. All right, futures here. Let's see what we got over here. Yeah, really big spot. They flush it, they break the 21, they pop back to that 21. As they pop it back, they cancel every sell signal. So we don't have an overly bearish 1 hour time frame, a 30-minute, a 15-minute. They even get a 5-minute buy trigger. But we are popping back into what could be a little bit of a brick wall. So yeah, I would say 23-1 on the NQ. Back above that, things get pretty interesting here for the bull skis. Yeah, the big crapple for now. Which, that won't help the QQQ. So let's say Apple takes this daily squeeze. It's feeling frisky and they break it short. Doesn't mean that single-handedly takes down the QQQ, but it will not help. Then there's Tesla over here. Excuse me. I think looking a little sketch. Kind of got that look in its eyes, that little glaze. Under the 50, under the 21, under the 200. Daily squeeze breaking short. And then, another one here would be the Amazon. Now, one point of view could be, hey, if they hold 210, it might be a great buying opportunity. The other point of view would be, hey, if Amazon begins to puke below its 200 SMA, going to put a little pressure on the market. But then, meanwhile, NVIDIA looks like a champ. Excuse me, Microsoft gets a brand new daily buy trigger. Meta looks pretty good. Broadcom looks awesome. Getting a little bit of everything, as always. All right, good morning, good morning. Yeah, so BRB 206. My thoughts on gold. How are the gold futures here? It might not matter, but I'll still show you. The one thing that can make the big breakout here a little bit tricky is this is a futures, mind you. But I believe the same thing for cash gold. Again, it might not matter. But they're going for a potential breakout when momentum on your weekly chart is actually trying to shift back to the sell side. So you've kind of got this big divergence playing out where unlike your previous weekly squeeze, that one you caught on a fresh momentum cross, they kick it into a sell cycle, they hold support, they hold structure, they kick it back into a buy cycle, you get that fresh pop. For this weekly squeeze, momentum peaks back here. It's on the decline, it crosses negative, and now you get your brand new squeeze. So if anything, just keep a little eye on that. But more of a here and now look at it. The 1 hour squeeze looks perfect, and then yeah, that daily squeeze, more of a momentum thing. Check the pretty colors, and the trend is good, the structure is good. But you haven't had that daily MACD on the buy side since the end of May. They shift it into a sell cycle, and they try to break out, they fail. Tries to break out, it fails. They go forward again. They try to break it out, it fails. If they can get the official shift back to the buy side, they hold it and they keep it. Then I'm a bit more of a fan of the breakout. Let's go check the 2-day squeeze. Same thing here for your 2-day squeeze. And you've had a 2-day squeeze since the middle of May. You've had a 2-day squeeze. You've had really good trend. You've had really good chart structure. But how come we're not getting that giant immediate breakout? From my point of view, would be a momentum issue. Check the big three, and we have the big two. Of the big three, momentum is really it's usually going to be the big one. All right, they pop it, they can't break it out. They hold it, they pop it, can't break it out. And we haven't gotten that shift yet. And then for the 3-day squeeze, same conversation. So with patience, we might be in a spot exactly like back here, where again you have great trend behind you. You have really good chart structure, compression from your squeeze. But look how long it took it. December, January, February, then they get that shift. Then you got the ultimate combo: compression, in and uptrend, really good structure, fresh tank of gas for the bulls, and the breakout, the pullback, the good stuff. So I would say it's trying to get there. But I'll admit, and excuse my French, these can be the biggest pains in the ass to trade because they have everything for the breakout. They paint the picture of the breakout, but it can just be so tough to actually get the breakout until momentum says, all right, I'm geared up, I'm locked up, let's go for it. Then you're getting caught up in this game. All right, I'm long, they pop it, I'm counting my paycheck, and they pull it back on me. I'm long, they pop it, and they pull it back. So yeah, I would say they are working on it. They are chipping away at it. Okay, David, it's a really good question. So David says, I noticed on the sheet Walmart is on my focus list, but the sector is one of the bottom ones. Why would that be a focus? Right. Really good question. So we got caught up in this situation last week, where we bought some Kroger. All right, bought it, pulled back, stopped us out, all the ugliness. And Kroger belongs to XLP. And all week long last week, your two weakest sectors were healthcare and XLP. Then they go and give you a total layup with something like your 30-minute squeeze here in Broadcom, which is one of your strongest names on the board in your absolute strongest sector, or what last week was your strongest sector. I don't think you can get much more edge around a trade. In a good market, strong sector behind it, beautiful 30-minute squeeze, good entry, all the alignment. Where Kroger is just, hey, there's a nice daily squeeze. It ain't got too much more around it, but let's jump in and pull the trigger. Do that 100 times in a row. I don't think we're going to love the results. Do the Broadcom trade 100 times in a row, and I think we're in great shape. So to answer your great question here, why would Walmart be on the watch list? As a piece of going through that process of elimination. All right, we enter the week here with stock-wise, XLU, Dash, Walmart, Meta, Microsoft, NVIDIA, Broadcom, Google, XLK, and the SMH. Now the next step would be, all right, how can we narrow that down based on the picture over here? If we had anything in healthcare be an immediate no-go, anything in XLP, so to your point, for Walmart. Wouldn't love energy, wouldn't love the transports, real estate, Bitcoin financials. It would mainly be, if we're taking top five, utilities, gold, Big 10, XLK, and the SMH. With a very clear standout, obviously being the XLU. So a better watch list setup would be avoid Walmart given the fact it's part of a crappy sector. And then if we pull up a chart of the utilities here, Maybe at the open watching something like that 1 hour squeeze. The only context being what can make these XLUs, XLPs, energies, what can make the things outside of big tech, big semis really tough. Not always, of course, but sometimes they catch all the love, meaning XLUs popping, energies popping. They catch all the love when they're dumping all the other names. Sell Nvidia, sell Meta, sell Broadcom, sell all the big boys. Then they rotate that cash into utilities, Dukes, SOs. Point being, it's like, all right, here comes XLU, beautiful squeeze. You jump in, you load the boat. The morning they decide they want to go back to the FANG stocks, big tech, big semis, Mag 7, you kind of get caught up in that rotation. So neither here nor there. But for that reason, I trade things like utilities a little bit smaller than I would trade things like big tech, big semis. Food for thought. But no, yeah, great question. Take that top 10, then based on the sector rankings, try to narrow it down to maybe 3, 4, or 5. And because I looked at it over the weekend, of course, it's basically it's a 1 hour squeeze on XLU. Is pretty much the entirety of the immediate watch list. All right, good morning there, Mr. Ross. Ross watching some Cisco. The disco with the Cisco. All right. Then I got to hit the road after this one, guys. All right, so more of that conversation of daily squeeze lacking momentum. And you had a daily squeeze back here with good momentum. MACD bars above 0, supportive of the push. They pull back, they chop it. Now you're back in that compression phase, but momentum's going back through that sell cycle. To their credit, they keep good structure. And that can be very bullish. Momentum kicks off the sell cycle. That's pretty much the bear's best chance to strike. Momentum shifts, they break some support, they break some structure. They come in and wreak a little havoc. When they can't do that, you keep your structure 21 above the 50. From there, if they can get momentum back to the buy side, it can create that quote unquote slingshot move. They pull back on price, they pull back on momentum, then they slingshot it right back up in the direction of trend. So think the Bitcoin futures daily squeeze. And this is early June until we'll call it mid-July. You're in the compression phase, in an uptrend, really, really good chart structure, but we're waiting 2, 3, 4, 4.5 weeks for a breakout. And what we're waiting for 4.5, 5 weeks is momentum. They tried getting it back here, couldn't quite get it. They failed the breakout, they pull it back, they chop. Momentum finally turns a corner, then the breakout is so much easier. Calling for timing, calling for direction, buying the pullback, buying the 30-minute squeeze under the surface. Everybody's game gets a little bit easier. So potentially Cisco's kind of in that spot. Good trend behind it, good structure, good support at your 50. But if at any point you want to call for that daily squeeze to break long, we need the Momo. Good looking car. Now we got to get some gas in the tank. But all right, y'all, I got to run to the next room here. So folks in my room and folks over in the main room, I shall see you in a few minutes, take you through the open. For the rest of you, happy Monday. Welcome back. Hope you had a good weekend. And yeah, be patient here into the week. Right. To me, this all translates to you have very little edge to call for a big aggressive trade. And there's a time and a place for that. this isn't that picture. This is, all right, maybe you find a 30-minute squeeze, take a quick day trade. Some markets are going for the kill. Some markets you are keeping the lights on. To me, this all screams be patient, be chill. More importantly, do not give back your month of July, your month of June. Don't get back the profit from the good action. And, go for a couple of base hits, keep it loose, keep the lights on, then wait for your next moment in time for the big shot. But all right, y'all, thank you again. Happy Monday, and I'll catch you same time, same channel on Wednesday. Till then, go get them, and audio.